Lori, it's great to have you here today. This rally is somewhat hard to believe. We saw this stark turnaround that began yesterday and has just continued to march higher throughout today's session. Is this rally to be believed? Have we put a bottom in the market, and the geopolitical concerns, are they largely behind us from an investment perspective?
So, look, I tell you, I think that we are going to be higher in the market at the end of the year. I think that it's very tough to say whether we've seen that absolute bottom in the short term. One of the things that we've done is compare the current crisis to what we call the post-financial crisis growth scare. So things like 2010, 2011, the 2018 China trade war. And, those were big sort of scary things that happened to markets that investors didn't fully understand but knew that they were bad. They just didn't know how bad, and it took some time to figure out. I would put that in this category. Those tended to see drawdowns of 14 to 20%. And on our worst day here, we've only seen about 12%. So it wouldn't actually shock me at all to see some further interim downside. But I do think that what we see on many of the sentiment and positioning indicators that we track, that things are already very, very beaten up. And if you look at net bulls on the AAII survey, they're actually worse than they were during the pandemic. They're back down to 2013 financial crisis type levels. So we do think a lot of the pain is already in the markets, even if perhaps we haven't found the bottom in the very short term.
And so you mentioned there a little bit about investor sentiment, which I just always find so fascinating, the psychology of the markets and trading. We have some very serious situations happening in the world right now. Of course, mainly what's going on with Russia's invasion of Ukraine. Yet the market continues to march higher. Are investors buying because the market was really oversold, or is sentiment more positive than it feels like it should be right now?
Look, I think that what you see when you look at the history of military incursions or the history of these growth scares is that when bottoms happen, things tend to turn around very quickly. And the rallies off those growth scares, those lows that I mentioned, we actually tend to see markets get back to pre-crisis level highs within 4 to 5 months. So investors who are seasoned know that bottoms always feel terrible. They always feel frenzied. I think a lot of them also feel hopeless. I wouldn't quite put us in that category today. But we know that this is how icky these kind of moments in the markets feel. But when you do see those bottoms, you tend to see things turn very, very quickly. And so I think that's where kind of the phrase hold your nose and buy comes into place.
Lori, it's Morgan. I mean, it's really fascinating the way you've looked at this versus other periods of time over the past decade or so. But what we haven't seen over that decade is white hot inflation like we're getting now. And it does seem like that is very much the biggest risk from the geopolitical situation that's playing out on the ground in Eastern Europe right now to markets here. So how are you factoring that into your thesis, especially given the fact that you see the S&P ending the year higher?
So it's a great question, Morgan. And I think there are two kinds of inflation to look at emanating from this crisis in particular. There's the commodity price inflation that's related to energy commodities. And frankly, I do think that that's pretty well understood at this point in time. I mean, you just have to look at sector performance year to date and see how much the energy sector is up versus other sectors. Then there's the non-energy commodity inflation. So things like grain, corn, certain metals. That is very meaningful to certain industries. But we actually did a survey of our analysts last week, and it doesn't have as wide of an impact as those energy-related commodities. So, we do take this crisis seriously. We do think that there are inflationary impacts. I think the one that's the broadest, though, is the one that's the most baked in.